we get a lot of phone calls these days with concerns about where energy prices are. And granted, at the end of the day, the price of Bitcoin, I think we'll agree on, is more important than where the price is of energy, right? But nevertheless, we do get these questions like, the Bitcoin miners are going to be destroyed by energy prices where they are right now. But some of these companies have locked in lower prices. Some of them have not. How do you counsel some of the companies today with energy prices the way they are?
Sure. And, like you said, right now with the run up in Bitcoin prices over the last year and a half compared to the cost, it is an incredibly profitable business still. And so the cost of energy matters, but not as much in the near term. But that's not what we plan for. We want to plan for the long run, and we want to plan for the marginal economics when things get tighter. And so what clients are able to do, depending on their complete risk profile and whether they're a self miner or whether they're a hosting company, depending on what types of the tenor of agreements, clients can lock in power for 10 years or even further out if they want. And they can lock in power even before they've built their facilities. We typically don't recommend that because there's so much execution risk until you're actually plugging in miners. But at some point, when you do have certainty that you're going to be taking power, you can lock those in. The markets are very liquid from a wholesale perspective. And so, these markets are traded over the counter, they're cleared on ice, they're transparent. They're, on a daily basis, you can see what the cost of power is, from tomorrow through buying it over 15 years. So it's very doable to lock in your cost. And then the added benefit is you're locking in your worst case cost. So for this volume of electricity, this is the most you're going to pay over the life of that. And then from there, with these loads, they're very flexible, right? So they can turn off. So now that they've bought power, let's say for 10 years, every day they can say, well, is the price I paid for power, like, would I rather mine Bitcoin or would I rather not mine Bitcoin and sell my power? So they'll all have a break-even price for the economics of, is it better to sell my power at a high price where it's spiked, or is it better to mine Bitcoin and then monetize that into revenue? And so, we really look at our miners into, we translate Bitcoin into dollars per megawatt hour and say, okay, if you're buying it at $40, you're implied right now selling it for $200, $400, $500. And that's the way we can talk efficiently with them about the power purchases.